The world is once again at a boiling point. In June 2025, tension between Iran and the alliance of United States and Israel have escalated drastically, erupting into open military conflict. With airstrikes, disruption in oil routes, and rising political instability across the Middle East, global markets are already feeling the shockwave. But beyond the headlines, here is what many are wondering. What happens to the real estate market, especially in Dubai and globally, if this war continues? In this video, we will break down the short-term and the long-term effect of this conflict on Dubai's booming property sector and examine the global ripple effect across the real estate market. Tension between Iran, the US and Israel are not new. While Iran and Israel shared cordial ties during the World War, over the decades, region has seen proxy wars, sanctions and covert operations. Iran backing of group like Hezbollah has only intensified hostilities with Israel. Fast forward to 2025, these cold conflicts have now turned hot. Israel has already spent over $67 billion in Gaza by end of 2024 and is now pouring $725 million per day into expanded war efforts against Iran. Iran's economy is crumbling under pressure. Oil exports have plunged from 1.5 million barrel per day in 2023 to just 100,000 barrel per day since the strike began. Energy markets are in chaos and the risk sentiments in the Middle East is at a multi-year high. Dubai is the financial heart of Middle East, but how exposed is it to regional conflict? What could go wrong? In the immediate aftermath of such wars, there is often a dip in investor confidence. High-end buyers, especially from abroad, may pause large ticket purchases to assess the risk. Tourism and the short-term rental market might take a short-term hit due to perception of regional instability. But here is what usually happens. Dubai is often seen as a safe haven for capital in times of turmoil. Investors from Iran, Iraq and even part of Saudi Arabia typically move funds to Dubai for safety and stability. This boosts demand in mid to high residential areas such as downtown Dubai, Dubai Marina and business bay. Oil prices matter. Regional war often causes oil prices to surge. Higher oil prices is equal to more revenue for Gulf nations like the UAE. That extra liquidity frequently gets reinvested in local infrastructure and real estate. In fact, in 2023, Dubai real estate market saw a 34% surge in transaction value, reaching to dirham 151 billion. Over 60% of those sales came from off-plan properties. Now, Dubai real estate market has a track record of defying regional chaos, historical resilience. During the Iraq War, the Arab Spring, and even the recent Israel-Palestinian escalations, Dubai real estate market remains stable and rising. It has built a global reputation as a neutral, secure and business-friendly destination. Likely outcomes: if Iran becomes more unstable, wealthy families, businesses and even corporations might relocate to Dubai. Just like Ukraine war, which saw a surge of Russian buyers in Dubai, we could see similar inflows from across the region. Risk to watch: tourism could see a short-term dip, but is likely to rebound unless the conflict directly threatens the UAE. Construction material price may rise due to disrupted supply chain on the key routes of Strait of Hormuz and Red Sea, slowing down ongoing developments. This war doesn't just affect the Middle East, it has a global consequences. Safe haven investing. Global investors may look towards London, New York, Singapore, Zurich or even Dubai, not for returns but for safety. Inflation and interest rate. High oil prices typically lead to higher global inflation. If inflation surges, central bank like US, European Union may keep interest rates high, making mortgages expensive. Result: pressure on home buying and investor confidence in Western markets. Luxury real estate gains. In uncertain times, ultra-high net worth individuals often turns to real estate, gold and art. You can expect to see strong demand in cities like Dubai, Monaco and Miami. If you are in or around real estate, whether in Dubai or globally, keep a close eye on these signals. Oil prices. Higher prices is equal to more liquidity in the Gulf, is equal to more investment in real estate. Refugee and migration patterns. New wave of migration from conflict zone could boost demand in Dubai, Turkey and Europe. Investor sentiments. How safe do foreign investors feel about the region? Dubai branding as neutral tax-free will be the key. War expansion. If the conflict spread to other countries, market may see deeper impact. Risk assessment becomes even more important. While the Iran versus USA and Israel war may shake the global market in short term, Dubai's real estate might actually benefit long term thanks to its strategic neutral stance, economic stability, and global investor trust. And if you are a smart investor looking for opportunity to invest in Dubai, I have a link below in my description you can reach out to. Meanwhile, the global real estate market may face turbulence from inflation, rising interest rates, and cautious investors' behavior, especially in emerging markets. But as history shows, Dubai thrives in uncertain times. During 2023 Ukraine war, Russian buyers flooded Dubai. In 2023, real estate transactions surged 34% to 151 billion dirhams. Over 60% of the property sale came from off-plan investments. Dubai's resilience is just not luck, it's the strategy. For investors and developers, this is not the time to panic. In every crisis lies an opportunity. The smart ones will know where and when to move. Nobody likes war, but if you feel and you like the video, please do comment your point of view, and thank you for watching.